Hope everybody's having a great morning so far. We'll be starting in just a minute. Here we go. Here's a link for this. Here is a link for that. Let me go ahead and share my screen here. And boom, there we go. Now all I have to do is move this to this screen here, put this here. All right. Good morning, good morning, good morning. We got David, Omar, CJ, Daniel, Robert, Jill, good morning, Carrie, Jonathan, Dieter, sorry if I'm mispronouncing your name, Julian, Kirk, Tom, Terrence, Rebecca, Heather. Good morning, everybody. Good morning, everyone. And you guys can see I'm already sharing my screen. Helicopter Gal, Henry, good morning, Harry. Good morning, everybody. Good morning, and good morning. I hope everybody is doing great today. Just post this here. Let me get this other screen here. Here we go. That's what I wanted to get here. We got this. Perfect. All right. Randy, Wardog, Pat, Rise, Brian. Good morning, Brian. Karen, Ray, Heather, Scott. Good morning, everybody. Duzzy, J.O., J. Murray's in the house. Good morning, Murray. Never see you here on YouTube. Good morning. Look at that. We got over 100 people here in less than 100 seconds. Good morning. National Filet Mignon Day. I had a filet mignon last night. Actually, I should have waited till this morning. Delroy, Kane, or K, not Kane, K. Good morning. Here's my email address, guys. roger@rogerscott.com. Also remember, I said your name right the second time, Dieter. Good. So a few things for you guys, just a few things. I'm going to be in my VIP room today at noon. I'll be doing the all the updates and taking apart the PPI report, which you don't want to miss out. And if you missed my gap to recovery strategy, I'm going to be talking about that on an evergreen. You can catch it here. Also, don't forget the good morning, Carlos from Northridge University. My girlfriend from years and years ago, before I got married, she used to go to Northridge. I used to live across the street. My office used to be on Reseda, Carlos, Reseda and Nordhoff. That's where I had my office, early 2000s. Steve, good morning. Rochelle, good morning. Raj, good morning. Good morning, everybody. Also, don't forget, Customer Service Live, aka the Cam and Gustavo Show. You don't want to miss out. It happens every single day from 10 a.m. to 1 p.m. Don't miss out. All right, let's begin. So far, we have a huge report coming out at 8:30. We'll be here in real time. I've highlighted the year, the pertinent part, and I've highlighted the core. This is the regular, and this is the core. And they're expecting the same number as a year ago. So Moondog in the hospital. That's terrible. Eagle Beagle. Good morning, Eagle Beagle. Flying Ronin is in the house. Look at that. We got the whole mishpucha here. Moondog, how are you doing, Moondog? Can you give us an update? We got to get an update from you. Yes, it is, Dennis. It is. It definitely is. That's what's a good school. Yeah, get better, Moondog. We need to get stock tips from you here. All right. So we're expecting a number to be exactly what it was a year ago. So basically what they're telling us is inflation's getting better, but we're expecting the same number as we were expecting a year ago, which makes absolutely no good. Moondog is doing better. Yay, Moondog. So Moondog is doing better. All right, Moondog, we're already doing better if you're doing better. So they're basically trying to sell us a bill of goods and telling us that inflation is getting much, much better, but producers are paying exactly the same inflated prices they were paying a year ago. Now, this number could be a little bit better, but here's the thing: just by the fact that they're expecting a number that's exactly the same a year ago, should tell you that inflation is not all that much better. Hey guys, we're doing a lot better. Oh yeah, well, how much better are you doing? We're doing the same. So what the hell is that? So as you could see, a year ago, I only care about the year. They're going to try to smucker you with the month numbers. Nobody cares about inflation over a course of a month. Okay. So again, this number is going to be very, very important. And I'm going to be very skeptical of this number. And I'm going to give this number plenty of time. And also remember something. This is not the big number. The big number is going to be the CPI tomorrow, where once again, they're expecting a number that's exactly in line with a year ago, and ex food and energy, they're expecting it down by 0.1%. So again, is this just by the fact that these estimates are so horrific is telling us that the Fed is having a hard time with inflation. I mean, think about it. How much better could it be if their estimates are exactly what they were a year ago? I mean, doesn't that tell you everything you need to know? So again, I'm taking these numbers with a big grain of salt. And even if the numbers are better, I'm waiting to hear what Powell's going to say tomorrow. Because again, he's going to have a very, very difficult time convincing the public that numbers that are almost identical or identical to a years ago is real progress. Okay. Is the number this year on top of the number that the producers digested last year? No, it's not compounded. It's not a compounded number, CJ. Good morning, Louis. Good morning and welcome. So again, let's be very mindful that these numbers are setting us up for failure. All right. Exactly. It tells us they achieved exactly what Adam just said, what Eagle Beagle just said. Butkus, nothing. Kakapupu, nothing. Basically, we're pretty much in line with where we were a year ago. And another thing, how does that bode well for future inflation? Because think about it. If in a year they haven't been able to make progress and they start lowering rates now, do you think deflation is going to stay? No, it won't. I can tell you it won't. All right. So again, I want to see this number. I don't want to just see this number at 3 or 2.6. I want to see this number at 2.6, and I want to see this number at 2.3. If I'm not seeing if I'm not seeing the best case scenario, then what kind of progress have they been making? That's right, Dieter, kakapupu. Exactly. Right? Seriously, come on, let's be real here. Hey guys, inflation's doing a lot better. Oh, I mean, this is like a joke, right? Hey, inflation's doing a lot better. Well, where was it a year ago? Well, it was at 3%. Where is it now? It's at 3%. What the? Right? Good morning, Idris. Good morning. Welcome. It's Idris's first time. Let Idris feel welcome here. Let her or him know how much value you guys are getting from here. All right. Earnings. Today you have Nucor, Home Depot, SC, on. Home Depot already reported. The numbers were better than expected, but they're saying home improvement sales are down because of interest rates, that things are not, their forward-looking statements were not good. They were not good at all. They were actually bad. Look at Home Depot, and Home Depot is a huge home construction, home improvement, home building, down 2.36%, breaking below the 200-day moving average. That's not pretty. That is not pretty. That's bad. That's bad. When a major stock like Home Depot is breaking the 200-day moving average, you got to ask yourself, how good is the Fed have inflation under control? Because Home Depot, when they start building communities, they do. The first thing they start building next to it is a Lowe's or a Home Depot. Do you guys have any idea how much money Home Depot and Lowe's spends on research to determine if a community or an area is viable? If I was a home buyer, or if I was looking to buy condos, and I am in the market to buy some condos right now, the first thing I would look at if it's a new area is, are they building a Home Depot or a Lowe's in that area? That would be the first thing I would be looking at. Okay. So again, this is not good. This does not bode well. And if you think Home Depot is okay, let me tell you why I'm so focused on this. You know how Nvidia is really important to technology and chip stocks? Well, that's just how important Costco and Home Depot are to the economy for consumer discretionary and things that people need. It's not just Home Depot. This stock is very instrumental. You don't think this is going to impact BJ's and Costco and Target and all the consumer discretionary stocks? Good morning, David. Hope you're doing well. I think it will, or it may. So be careful. This is not a good sign. This is not the fact that Home Depot is doing bad and the fact that the Fed is expecting the same number from a year ago is just a big slap in the face. Dieter, yes, it's a long-term hold, but it doesn't matter. We don't care about fundamentals. We care about, okay, Dieter, I want you to understand something. Everything I do here answers the question of what we can expect in the next 5 days. If it's beyond the next 5 days, it's not included in my analysis. This is about how you can make money right now, not about what will happen a year from now. All right. This is a long-term hold. This is a long-term hold, Judith, because I think ultimately real estate I think interest rates are going to come down, but I don't think it's going to happen as soon as the Fed thinks. And I think we are going to make progress, but it's going to take a lot longer. And I'm expecting the first rate cut to not be sooner than November. And by the way, I've been saying that now for I've been saying that for, I don't know, 8-9 months now. Nothing has changed. So yeah, we care about what's going to happen right now, how folks can make money right now. Yes, it is, Cam. Yeah, it very much. That's bad sentiment for developers. Where do you think they buy their lumber? Where do you think they buy their lumber, their fixtures, their tile for spec homes? Home Depot is where when I was doing construction, when I was building over 20 hillside luxury homes in California, I bought a lot of stuff from Home Depot. All right. So let's continue. So far, indices are just a hair higher. We really don't know what will happen till the report comes out. I have my handy dandy TC 2000 live ready to go for when the report comes out. We'll have that information soon. Energy market. Let's talk about the energy market, okay? Crude oil. Look at what crude oil did yesterday. Crude oil, we looked at aviation property, which seemed to be in a relatively isolated area, but they have a brand new massive Home Depot, and that property became one of our 4 picks. Yep. Yeah, if you're looking to buy homes in a new area, one of the best things you could do is find them building a Home Depot. That area that I'm looking to buy right now, that Silver Lake community in St. Augustine that I've been talking about for ages, they just finished building a Lowe's there. Literally, they just finished building a Lowe's in that area. They're like a week ago. So let's talk about, forget about me. Let's talk about the crude oil market. We broke through that key level that I was talking with you guys yesterday. Okay. This broke through. This is telling us, remember, crude oil went here when we were fearing a recessionary environment. Recession and energies are not bad for each other. Since then, crude oil has broken through the 200-day moving average. Crude oil has broken through the year-to-date VWAP, the quarter-to-date VWAP, the 50-day moving average, the 100-day moving average, and my all bets are off buy level, and we're now above my downwards trend line. See that? So now I'm going to be looking at energy stocks. Remember how when gold went past our levels, we bought Newmont. We took a profit on it yesterday. You're all welcome for that. So now I'm looking at energy stocks because now we're above my buy zone. We're now above the 100. We're now above all key levels, and now I'm looking for buying. This is also telling us that that we're not that fearful of a recession right now. The recession is off the table. and now we're going back into, are we going to a deflationary period, or are we going to stay in an inflationary period? But recessionary period is off the table because we're now above the 100-day moving average, the 50-day moving average, the 200-day moving average, and all the VWAPs, and the downtrend has been erased by this bar breaking above this key level, which I told you about 2 weeks ago. Tell me it ain't so. Nathan says the frustration thing is Wall Street can't wait for rate cuts, yet recession are always followed by yes. And Nathan, don't think Powell doesn't know that. Yeah, if you're enjoying this, hit the thumbs up button. Why not? So we do have quite a bit of upside. So now I am going to be looking at energy stocks. And by the way, good Eagle Beagle. And by the way, for the record, it was not easy to find. I was struggling to construct my long list of stocks for you guys today. Struggling. Short side, like this. Long side, I was struggling. That's not good. Okay. All right. What about volatility? Well, volatility seems to be now between our all bets off, the world is falling apart level, and there's fear in the market level. We're right at the 20 level. The PPI report is going to dictate whether VIX starts going back up or not. So far, so good. Both VIX and crude oil are telling us that the markets are not going to go through some craziness as of right now. All right. This is telling us we're getting out of recessionary fears, and the VIX is telling us we're getting out of a recessionary fear. Does that mean technology is going to make new highs and the rainbows and the crickets are going to come out and the rainbows are going to be here? We're going to be making all gazillion dollars. No, it just means that that fear that we had a week and a half, 2 weeks ago of a recession is no longer there. And now the fear is just, are interest rates going to stay higher for longer or not? I don't know yet, Jonathan. Okay, Jonathan. Jonathan is that guy that goes to the bar, gets drunk, and asks the first girl to marry him that he sees at the bar. Jonathan, do you want to be that guy? How long will your relationship last? Don't you want to know first if energy sectors are now beginning to move higher? Don't you want to look at some energy stocks first to decide if any of them are breaking out? Don't you want to get to know the girl before you ask her to marry you? Jonathan gets right to the point. Jonathan, it doesn't work that way. We do everything like this. We don't go from here to there and from here to here and from there to there. I don't ask people who I met last night to give me a loan of $1 million. I don't ask women that I met last night if they want to marry me. We don't do that around here. We do everything A, B, C, D, E, F, G. Because if you go to answering your question right now, you're not going to know the answer to the bigger question. Is the energy complex ready to move up after the CPI report? Jonathan, everything is A, B, C, D, E, F, G around here. We don't go from A to Z and Z to A. This is not the place for that. All right? Don't do that. Don't do that. You're going to get yourself into big trouble. Good morning, Infinitely. So volatility, you don't even have the levels for the S&P 500 yet. How dare you how dare you ask if energies are going to go up where we don't even know if blue chips are ready to go up yet? Susan, good morning. Jonathan, be careful, Jonathan. I'm watching you. So the next question is, what about gold? Is gold singing the same song and dance as volatility and crude oil or not? Well, crude oil is above key levels. Volatility is below key levels, which is where you want it to be. Gold is above that level, which is why we bought Newmont and why we made money on Newmont. Good morning, Susan. Good morning. So we like this level. We're bullish gold as long as we can find gold stocks that are making higher highs, and as long as we have defensive stocks leading. We haven't got to defensive stocks yet, so we can't answer that question. And also, if PPI is really low, then tech is going to lead, and that's going to lead energy, gold, and blue chip stocks in the toilet. And we haven't even gotten to that, Jonathan. So you got to be patient. Yay, Dr. Serena. There you go. 366 within 18 minutes. That's right. All right, all right. So we're now becoming bullish on gold. We're now becoming slightly bullish on energies, as long as we can find stocks that are fulfilling our civil duties. And we've been bullish on gold already, and we already took our first profit on gold. You're welcome for that Newmont mining trade. No, it wasn't in the pit. It was in a swing trading program. What program did I put Newmont in? Can someone tell Duzzy? I think we took like 17-18% off of it yesterday. It was either a line or a pattern trade. Can somebody tell Duzzy where we put Newmont yesterday? Somebody will tell you, Duzzy, in a second. But it wasn't a pit trade. What about the bond market? Now, the bond market's going to be the most impacted by what's going to happen in the next 10 minutes. Shall we take a look at it? Of course we shall. Well, the bond market is very interesting. Remember, when we went up here, we were fearing a recession. We came off. We're not fearing a recession anymore, but the bond market remains above the 8-day EMA. Thank you, guys. It was the A line. Does it? It was A line. Thank you, Alan, Jill, Brian. A line. So we're not seeing a downdraft continue. Lower bonds, higher interest rates. Well, bonds went to a certain level and now they're coming back up. This is telling us that they're now becoming deflationary again, and this is my deflationary line. So here is the problem we have. We have bonds becoming deflationary, but we have crude oil moving higher, and we have gold moving higher, and we have volatility moving down. What is that telling us? That's telling us that bonds are not fearful of a recession, but they do believe that the Fed is going to start lowering rates, and they're moving towards a deflationary area, but not because of the fear that markets are selling off, but because of confidence that the Fed is going to start lowering rates. How can you tell all that by this? I can't. I have to look at crude oil, volatility, gold, and the 10-year in order to determine what I just did. So we just determined that because energy is starting to move higher, gold is not being whacked up, spiking up like a madman, and volatility is breaking down, that the fear of, remember, it's a movie that continues. We don't start at a new movie every day. We continue the movie where we were. So you could see that volatility is dropping, bonds are moving higher. That's good. And because gold is not spiking through the roof and crude oil is not spiking, is not here, it's telling us that inflation, that recession fears are lower. Is that good for the market? Yes, it puts us back to, we had three doors. We had recession, inflation, deflation. Recession, the door of recession is now moving away from us. And we're now coming back to where we were before. And the question now is, what type of stocks, and are stocks going to mimic deflationary environment? Are they ready to issue deflationary environment? And then what sectors are rising? And then, Jonathan, then we're going to decide if energies are the stocks that are going to go up. Only then. We have a long ways to go, Jonathan, till where we answer your question. We're nowhere near there yet. We're on chapter 2. We got to get to chapter 4 first. So what do we know? We know that typically stocks love deflationary environments. They love non-inflationary, non-recessionary environments, and they love when volatility breaks down. So now we're going to start looking at stocks. Okay. After we finish now that we've looked at commodities, we're gonna look back, take a step back, look to see the big picture, and then we're going to start looking into stocks. And maybe by the end of this session, we'll be able to answer Jonathan's question. And the question is, what's the best energy stock to buy? And are energy stocks ready to be bought? And should we even be looking at energy stocks? That will happen in about 10, 15 minutes. And we don't have the PPI report yet. So we got crucial PPI data coming out. We know that Home Depot crapped the bed. We're still pricing in a Fed cut in September. We'll have to see what Mr. Powell will say about that. and we'll see how the bond market reacts to that, and then we'll see how the energy market reacts to that, but not till 8:30, which is 6 minutes away. I still think the Fed is not going to take action, which will cause the bond market to fall apart before November. But maybe Powell sees something we don't, or maybe this report will magically be a lot better than what it was a year ago. I don't see how it can't. So I'm really seeing these reports, these estimates, as setting us up for success, even if success is not that great, because you and I are not just going to follow this report. We're human beings and we have a brain in our head. And if this number beats estimates, but it's 2.5, you're going to ask yourself, a year ago 2.6, but right now 2.5, that sucks. A year ago 3 and now 2.9, that sucks. So we're not just going to buy this report. We're not going to buy what they're selling us. We're going to use our brain and determine. So we want to see this report really good. We want to see this report at 2.6, at 2.3, or I'm not going to be convinced that producers are on their way better, and either is anybody else. And if you think Powell is going to fool people with this, he's not, okay? Right, does he? So we will see. We will see what happens. So let's continue. We got Home Depot. We know they did not outperform. We got Producers Price Index set to be released in about 5 minutes. We know that they're expecting a number that is right here, 2.6 and 3. Really? They're expecting 2.3? It says here will stand, year over year, 2.3 compared to a previous figure of 2.6. No. They're expecting a 2.6, not a 2.3. That's BS. I call BS. They're expecting a 2.6. So this is not accurate. This is why we look at them together. They're saying they're expecting a 2.3. They're not. Does this look like a 2.3 to you or a 2.6? Somebody is fudging the numbers. All right. Core CPI, let's see here. Really? 2.7 they're expecting versus 3? Really? I see them expecting 3. Do you see why we go through several pieces of information? Really? So this is making it look like they're expecting numbers that are a lot better. But let's look at what Econo Day is expecting. Econo Day. Nope, they're expecting the same numbers. Sorry to inform you, but they're not expecting the lower end of the range. They're expecting exactly the same numbers from a year ago. Do you see how we're getting bamboozled here? How you have to look at the actual data, not just see. If you read this, it's going to make it look like they're expecting numbers that are a lot lower. Caught in the act, caught red-butted. All right, Europe. How's Europe doing? Are they? They're waiting. They're up 2.6, investing regional data. Utility stock link. Utility stocks are the most defensive stocks. Now, if utility stocks are going up, would energies go up? Maybe. But would leisure stocks or semiconductors go up? Nope. So they're being defensive. Europe is being defensive. Do you see how important it is to come here every day? You read stuff like this, and then you look at the actual expectations. You're like, they're not expecting 2.3 or 2.6. They're expecting 2.6 or 3.0. This is straight from Econo Day. All right. What about China? China closed higher today. Tech, hardware, financial stocks outperformed. They're getting a little more bullish. Financial stocks and hardware, that's bullish. That's a bullish market cycle. However, gains were capped by concerns about their policy. I like what I'm seeing in China. They have deflation. We have inflation. Together, we balance each other out. They vary. Yeah, that's why I use the most reliable one, Econo Day. Econo Day. This is the most reliable one, Econo Day. But notice how they conveniently picked the lowest estimates here to show you. Right? The lowest. They didn't tell you, hey, they're expecting the same numbers they were a year ago. I want to see these numbers. I want to see these numbers. These numbers will make me say, yeah, there's a good chance that what the Fed is doing is working. If we're not at 2.3 and 2.6, All right. So Europe is up a little bit. China is up a hair. Japan closed sharply higher. Remember, they were on a holiday. They were on a holiday. Sentiment received boost from a weekend electronics and financial stocks. So they're following China. Japanese yens continue to decline against the dollar, dropping in 5 of the last 6 sessions as the unwinding yen carry trade slowed and the dollar strengthened, followed better than expected U.S. economic data. That's weak for the gold market. Pre-market, do we have to worry about something? Well, we're going to get a boost in computer stocks because of Dell, and we're going to get a boost in consumer staples. All right. All right. Now that we went through that, let's look at sectors. We have to answer the question, what sectors are going to rally? Notice we're nowhere close to answering the question, should we be buying, what energy stock should we be buying today? Nowhere near there. All right. Momentum levels. Are momentum levels strong? Well, there's 47 stocks making 90-day highs right now, which means there's zero momentum to the upside. Zero momentum to the upside. All right. All right. Bond market is rallying hard. Whoop. We thought it was rallying hard. Let's look at SPY. Let's see if SPY moves up. Let's look at the QQQs. Let's see if this gives us a little bit of a boost. Let's see what the numbers are. All right. This is a great number. Okay, this is a really good number right here. A really good number. That's a really good number. That's see, that's below the lowest estimates. That's telling me that they are, in fact, making progress. Okay, you were 2.6 a year ago. You're 2.2. That's good. That's good. What about X food and energy? Do we have that number? Does anybody have the core number? The core number is going to be the big one. This is what the Fed looks at. But this is a fantastic number. This is a fantastic number. Powell can say, hey, PPI, we were expecting 2.3 to 2.6. We got 2.2. That's a good number. This actually says, yes, we're making progress. Not a lot of progress, but we're making progress. But what about, okay, yes, this is good. This is better than their expectation. So you see, we didn't meet their expectations. We didn't even meet their low-end expectations. We beat their expectations on both counts. This is very good. This is good. This is great for the market. This is bullish. This is bullish. Let's see if the market's the market's not reacting to this number. It went up and then it went down. Now, honestly, this is a good number. That's not a bad number. All right, we'll check back in 10 minutes. But this is a much better number than I expected. This is a no monkey business good number. This is telling us that producer prices are, in fact, going down. All right, I like that. This is good. Now we don't have to play games. The numbers were better. This is good. Good. Get excited about this. All right, momentum level. So first off, there's hardly any stocks making 90-day highs. I was struggling to make our long list today. I was struggling to make my long. I literally was it wasn't easy. What about the short list? There's only 69, but honestly, it wasn't that hard. There was a lot of stocks breaking down. All right. Well, let's take a look at CPI tomorrow. Let's hope the CPI did the same thing. All right. But this is good. This is a step in the right direction. Now the key is, how is the market going to react? I don't know about price gouging. It just says that producers are doing better than consumers right now. I wouldn't read too much into it, Cam. So again, we don't have strong momentum levels right now. We don't have strong momentum levels right now. Why do we not have strong momentum levels right now? Let me show you. Let's go to our sectors. All right. So yesterday I told you that speculative stocks like technology, semiconductors, Bitcoin are starting to come back up. Well, and defensive stocks like consumer staples, healthcare, the Dow stocks are starting to come back down. That's a sign that we're starting to start getting a little mojo in the market. But before we get too excited about mojo in the market, let's see how one second here. Let's see how the sectors are performing. All right. Bitcoin looks like it needs to come up. This is way too big of a downside move. This Bitcoin needs to go above 55 to really tell us it's moving higher. What about semiconductors? Well, we need to move all the way up to the 265 level to be bullish again. But I'd love to see us go up to the 245, 250 level. My point is, we can still move higher here, and this will still be a downtrend. So we're going to be very, very, very careful on semiconductors right now. And that same thing I just said goes for technology. Energy, on the other hand, is starting to move into this gap on a very strong move. So I am starting to like energies. And as I mentioned, USO is starting to move higher, which is beneficial for us. I like that. So we will start looking at energy stocks, but only energy stocks that are making swing highs. So we need to find energy stocks that are making swing highs. Communication services looks okay because of Meta. I would be careful here, but I like this recovery. And this recovery is taking us to a good place. I'd like to see us above 86 level. S&P 500's at a critical level, as you guys will see in a few minutes. We need it to go above here, or it can come right back down, and it will continue a downtrend. Financials, want to see financials above 83. QQQ, we got to be careful here. Industrial, we got to be careful. We got to go above this level here. Real estate, I'm really liking a lot right now, because it's still in a long-term uptrend. Utilities, I like right now. They're still in an uptrend. While utilities, these are defensive sectors. I will not be going long speculative sectors until defensive sectors have broken down. Have these broken down yet? No, they have not. Dow Jones, not doing all that great so far. Consumer staples are rocking and rolling. Defensive sectors. What about consumer discretionary? Consumer discretionary has a gap here, and a gap here. We got to see this come all the way to 180 and fill this gap before I start getting interested in consumer staples. What about mid caps? Mid caps look like they're struggling. Healthcare looks good. So what are the sectors that I love right now? Healthcare, utilities, consumer staples, and real estate. Bingo, the most defensive sectors. Still no go on the speculative sectors. What about Russell 2000? Russell 2000 looks awful. Russell 2000 looks like it's curling back below the 200, just like mid caps. Retail looks awful. Stocks like Bath, and Body Works, things like that. Lulu, Etsy, Capri, Dave & Buster's. Those stocks aren't doing great. Basic Materials is in the crapper, and Home Builders needs to really come up here in order to be interesting once again. So my point is, we're still seeing a strong trend in defensive stocks. So we got to be really, really careful. What about the QQQ? Well, the QQQ is hitting the 100-day moving average right now. All right. We have to wait for the QQQ to be above the 50-day moving average. Until we get the QQQ above the 50-day moving average, I'm not going to have a lot of interest in it. It's only up pre-market right now, 0.58. So we got to be really, really, really cautious that this doesn't turn around and cause the QQQ to go back into its place. Okay. What about S&P 500? Well, S&P 500 is above the 100-day moving average, but below the 50-day moving average, which means we are in a twilight zone, which means we are consolidating, which means the market can go either way or no way, which means when we're between these two indexes means shake and bake. Have you guys been feeling like we've been shaked and baked lately with our positions in a bag? Like we're that chicken in a shake and bake bag? That's because we're between the 50 and the 100-day. This is a dangerous area. We're not going to get really bullish till we're above the 50-day moving average. Institutions will not come in. All right. So be very, very, very careful. What about chip stocks? Chip stocks are barely at the 8-day at the 8A line. Chip stocks are not even close to the 100-day moving average. Who's talking about? Mark's talking about NVIDIA. Mark, let me ask you a question. What do you think will happen to NVIDIA if the semiconductor index breaks down right here? Let me show you. Let me show you a little dose of reality, Mark. This is the semiconductor index. We're below the 100-day moving average. The biggest holder in this is NVIDIA, holding 20% of this index, Mark. So let me ask you a question, Mark. All of these stocks, including NVIDIA, are down here. You've got the 100-day moving average, a strong resistance level, the quarter-to-date VWAP, the 50-day moving average. All of this has to overcome before chip stocks get bullish. Do you want to take that chance with NVIDIA? Do you really want to take that chance? Remember Clint Eastwood? Do you feel lucky? You've got 1 resistance area, 2 resistance area, 3 resistance area, 4 resistance area, and a gap here. How lucky do you feel? Ultimately, Cam, NVIDIA will do what SMH is doing. One stock is not going to drive the entire chip sector. You get a nasty report about AI and AMD today, and you see how NVIDIA reports. Don't listen to me. Go ahead and buy all those stocks. But I'm telling you, you guys we're still in a steep downtrend. All right. So again, be very, very careful. Let's look at the bond market here. Bond market's moving higher. I like that. QQQ. Yeah, about a percent. But let's see what happens as the market opens. Yeah, go ahead, make my day. So again, we have to be very, very careful here. Look at SLK. Look at XLK. We're still not at the 100-day moving average. We're still not at the 50-day moving average. If this comes down right now, all of your tech stocks will start moving in a downtrend. Yeah, if you want to be a hero today, puts on SMH, getting closer to my entry. Yeah, Penny's looking for puts on SMH. Be careful, guys. Be careful. Be careful. But some people intraday. I don't care what some people did. It. People are doing. For every buyer, there's a seller, Mark. There's always an idiot out there. You have to have two party to every transaction. So a lot of people, not some people did yesterday, Mark. A lot of people did yesterday. A lot of people did yesterday. Yes, be careful and stay defensive. Well, look at the sectors that are in the toilet still. Mid caps, small caps, retail, consumer discretionary, financial, which are not looking that bad. QQQ, which is technology, they're all in the crapper. Be careful. Be careful. Also, speaking of being careful, don't miss my VIP room today at noon. And don't miss Gap to Recovery. It's on right now. And I talk about how I pulled show you guys how to trade gaps the right way. Please, please don't be a hero today. This is not a time to be a hero, okay? Not a time to be a hero. All right, momentum levels have not picked up yet. Also, you'd be a fool to get into NVIDIA ahead of the CPI report tomorrow. We have tomorrow the big report. The big report comes tomorrow. Consumer price index, consumer price index. You also have retail sales. You also have consumer sentiment. We have a lot of stairs to climb before we get into the right area. All right. Now let's talk about stocks. I'm going to try to get out of here a few minutes early today because I want to make some moves in the morning, possibly. It was very, very difficult for me to find stocks that. So who was it? Who was it that asked me that question about Jordan? I think it was. Was it Jordan about energy stocks? Well, energy stock. So Jordan. Now let's look at stocks that are on the move. 20-day highs. Do we see any energy stocks here? Nope, not one. You know how I know that? Because I went through it already. But there's some utility stocks in here like public electric and gas, like clean energy. Utilities, there's plenty of utilities, but not energies. How about 90-day high list? Did I go through that? Of course I did. Did I find any strong energy stocks in here? No. Good luck on your treatment, Eagle Beagle. Jonathan. So you see, Jonathan, I'm not seeing any energy stocks breaking out because I looked through this list before I give you my picks for the morning. So now let me give you stocks that are on my radar, okay? I'll do the short side first. Is this helpful to you guys? Is this cooling off your mojo to go long right now? Penny says, sitting on my hands until tomorrow's report, but lining up possible trades. Exactly. It's an energy stock. It's a utility stock. All right. Let's now one second. Let me take a look I'm looking at the market right now in real time. So bonds, meanwhile, bonds went up and now bonds are coming down. QQQ is now cooling off. And I'd love to see a gap up today because all these shorts that I'm giving you right now are going to be worth money. I give the best lessons. Well, thank you. I appreciate that. You guys can also send me an email, give me some feedback, roger@rogerscott.com. And don't forget, customer service live from 10 a.m. to 1 p.m. So you guys know how much I dislike this company. It backed away from the 200-day moving average, tested the 200-day moving average, almost tested the A line right here, and is now backing away. I think this is going to look a lot like Cisco. You guys remember Cisco? Me too, Cam. Me too. Remember Cisco? Boom, boom. Pretend this is the 200-day line. Went in, backed away, and went back right back down. Cecilia says we are safe. We have Clyde analyzing the markets for all of us. Bless Clyde. Cecilia, that's the smartest thing I've heard today. Thank you for saying that. Yes, Clyde will always keep you out of trouble. Will always keep you out of trouble. Yeah, me too. Me too. For personal reasons, I don't like Wells Fargo. RHI, retailers. Look at retailers. Nice short. Taking my list with me to work today. DraftKings. Nasty stock. Use these bullish openings to take advantage of these short stocks. Still W, especially after Home Depot's report yesterday. I'm not seeing Wayfair doing really well. Play, Dave & Buster's. What a nice short. Elf. I did not have any trouble finding shorts today. Look at that. Broke the 200-day. Finally broke the 200-day. Car. Beautiful short. BWA. This is the first, no jokes, this is the first time this has been on my list for a while. Oh, yeah. Bonnie does a lot of work too. All the time. Oh, my wife says she misses me already. I love that. That's nice. Yeah, Bonnie's a backup for Clyde too. That's right. Let's continue this. Etsy. What a stinker. Uh, this is the company that the brother of the girls that I used to the Bronkmans used to own this company. I used to trade. The brother used to run the company. I worked for the sisters, for his half sisters, Sarah and Claire. But Edgar Jr. used to run this company, ran it into the ground as they run everything into the ground. WMG selling. This was a long time ago. Thank you. All right, let's continue. Zoom and Capri. Thank you, guys. All right, that's my short list. Let me tell you something. There's not a lot of stocks breaking down, but boy, oh boy, there's some doozies out there. There are some doozies out there. Let me just check price data one more time. Yeah, it doesn't look like the reaction is fantastic, which is not all that great. We'll see how it goes today. Do not trade the first hour of the day today, no matter what. All right, now I'm going to give you long stocks. I have to be a little creative on the long side, so let's all be very, very careful. Motorola, GFL, Boot is back. I'm waiting for Levi's and this company tend to used to trade together. I don't know about right now, but Boot is on my list. AstraZeneca Healthcare. You really can't go wrong. Well, you can always go wrong, but I like the stock right now. Brian says FTV. Let's take a look. FTV. Looks like a great A-line pick, Brian. Brian's been hitting it hard with the A-line stocks. Brian loves the A-line. Brian, you love the A-line more than A. And this is a perfect example why I have so many different programs. Some people, they love the gaps. Some people, they get addicted to the A-line. Some people love seasonality. Like I can tell Brian really loves the A-line. It makes sense to you. For me, the alpha top stocks make sense to me. That's my. So again, everybody has their preference. This does look like a good short, by the way, Brian. And Brian's been hitting it out of the ballpark with his A-line trades. He sends me his favorite A-line picks every morning, and they 8 out of 10 times they match mine. See, Eagle loves gaps. See, Brian, I could tell how much you love the A-lines. I could tell how much you love those A-lines. See, everybody's got a preference. I'll take a look at Duke in a minute. Let's take a look at Duke. But so far, CPT's on my list. Yes, but Duke Energy, look, it's a utility stock. Utility stocks are rocking and rolling, Omar. I've got several utility stocks on my list. This one too. They're all looking great. They're all looking great. See, some people love the cash flow. And you ask me why I have so many different programs. Because people love different stuff. Trupanion looks good. Now, a lot of this, I've noticed something interesting. A lot of the stocks that I'm giving you guys right now have a lot of back and forth. You see how this stock goes up, but it has a lot of back and forth. So expect some drawdowns with some of these stocks. You're not going to just get a clean move with a lot of these stocks. And that's okay. That's okay. Now, this is a clean stock. This is not a clean stock. To give you a difference, so you could see the difference between SU's a utility stock. Don't confuse SU utilities with energies, okay? See how this stock has a lot of back and forth? It's still moving up, but it has a lot of back and forth. Always ask yourself before you trade a stock, is it a a flyer, or is it a back and forth? Just different expectations. How do you figure out what my type is, Judith? You trade the different type of stocks that I show you in the pit till you determine what you like. We have the pullback, A-line pullback. We have the gaps. We have the income. We have the seasonality, and we have the bargain hunter with my top stocks. That's how I began trading successfully. Yeah, it's whatever sinks to you. It's just whatever gets you. You'll know. Like I get a bunch of emails from Brian about the A-line. I know he loves the A-line. I could tell, even if he didn't say anything. I know he never told me he loves the A-line, but I know he loves the A-line. And I know some people just love gaps. It's what feels comfortable to you. It's like a song. It's not a mechanical answer. It's a psychological answer. Some people love volatility. People that love volatility will love gaps. People that like pullbacks will love the A-line. People that like to trade my top alpha stocks will like stocks making all-time highs. It's what feels naturally comfortable to you. It's not something that somebody can teach you. It's something that makes sense to you. What Penny just said, get my Diamond Club and then you'll have all of them. DGX, my last bull stock. Yeah, it's not there is no, now this stock, see how it has a lot of back and forth, follow, like it goes up, but then it'll come down. There's nothing wrong with these type of stocks. Just understand, if you buy an option and your option is down 30%, it doesn't mean it's a bad trade. It just means there are certain stocks. It's a fingerprint. Every stock has a fingerprint. Some stocks do this a lot. And so, like, look at GE last year. GE was a perfect example of a top alpha stock a year ago. Look at this. Look at that. No back and forth. This was on my list of top alpha stocks maybe 6 times in the last year. Where this type of stock, see how the price action crosses yesterday's price action almost every day, but ultimately it goes up. It just means you need to buy options with a longer time frame, with stocks that have a lot of back and forth, maybe extra week, and you have to be a little patient. But don't rule out stocks that have this just because they have a lot of more non-directional volatility. They still move in the right direction. You just need to know what you're getting yourself into. Okay, so let me just do this. I'm not going to try to sell you anything. I don't have links for anything except for my gap to green from yesterday. Here, I'll give you my links. VIP room at noon, where we'll take apart the PPI report and we'll talk about key levels. I did not do intraday levels today. I will do them in the afternoon session, but I'll quickly show them to you right now. But we'll go through this in depth. I got to get out of here because I want to trade the morning today. I got to go to work, right? Like I haven't been working the last hour, right? Here, just to show you where we're at right now. So we are now between the 538 and the 533 level. If we break the 538 level, the odds are we're going to come up right here to the 545 level. And then we have this level right here. And then we have, a big level right here. So the next level is 538, 539. On the downside, we got 528. So 538 and 528. On the QQQ. Hey, Angie, how are you? On the QQQ, we're here. On the 5-day, you could see we're about to cross this area here. The question is, are we going to go above this level to the next level? The next level, we're at 455. The next level is 462. To the downside, it's 450. And again, I will go through all of these with you in the afternoon, okay? Let's just quickly see what the market's doing right now. Market looks like it's supporting the bulls. QQQ looks like it's moving nicely up. We're up almost a full basis point. SMH is doing great. It's up almost 2 basis points. Very good for but we're right at the 15-day EMA, and we have the 100-day on the SMH directly above us. Be very, very careful around here. Be very, 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 very careful around here. All right? All right, folks. Do not take action at least till 10 o'clock. Wait to see what sectors are rocking and rolling. I will be keeping you updated all day in the pit today and in the VIP room if you're in the pit and in the regular Telegram channel. Be careful. We have a huge report tomorrow. If the report is bad tomorrow, it will unwind everything that happens today. You got to be really, really careful today. If we had the CPI today, I wouldn't be as cautious. But we have a big, big report tomorrow. And inflation is much more important on a consumer level than a producer's level. All right. If you have any questions, comments, or feedback, roger@rogerscott.com. I hope you guys have a great day. Customer Service Live, aka Cam and Gustavo show between 10 and 1 p.m. I will see you later. Don't go making crazy moves today, okay? Bye, everybody. Look at that. We got almost 470 people in today. Bye, guys. Have a great day, everybody. Love you all. Thank you for being here. Moondog, get better. Oh, I will definitely say hello to Bonnie and Clyde. I will. They'll be trading with me today all day long. Bye, guys.